Price action isn't about predicting where price will go, it's about spotting where the most amount of money is. The reason why you find price action hard is because you are trying to predict where price will go before it even shows you its hand. Think of the market like an auction. Price moves based on who has the most amount of money. And if you don't know where that money is going, you are trading blind. So what you want to do is to wait for the market to act first, then you react. That's why in this video, I'm going to show you the 3-step system I use so that you can spot where the most amount of money is, so you can trade in that direction and stop guessing. The first thing you need to check before you place any trade is the direction of the market. And I know this sounds basic, but most traders completely overlook this step, and that's why they end up confused, drawing random lines on their charts, not knowing if they should buy or sell. The markets can only do two things: either it goes up or it goes down. That's it, 50-50. But here's what most people don't understand: the market doesn't move randomly. It moves based on who has the most amount of money. And the people with the most amount of money are the banks, the institutions, the hedge funds. So if you see an uptrend forming on your charts, just means that the people with the most amount of money wants the market to go up. And when you see a downtrend, it just means they want it to go down. That's it. This is crucial because if you already know the direction that the market is heading, you already have clarity on your buyers. We're not sitting there second guessing yourself, wondering if you should buy or sell there. Once you can clearly see the direction, you've already eliminated 50% of bad trades because you are no longer guessing. But here is where most traders make a second massive mistake. They see an uptrend and they just place a buy order anywhere, and then they wonder why the moment they enter, the trade reverses against them. That's because they skip the second step, the area of interest, or support and resistance, or supply and demand, or other block. Basically a specific area of value on the chart where you are looking to enter that trade. It's not just any random price level. It's basically an area the institutions have shown interest before. This step is critical because without it, you could be entering at the exact point where a reversal is about to happen. You could be buying rights when the institutions are about to sell. You basically have no idea if the big players are with you or against you. But when you wait for price to come into your area of interest set, you're basically putting yourself in the same positions the institutions are taking. You're entering when they're entering, and that's the only way to increase the probability of success. Alright, so you know where the market is heading. You also know the area to enter. But here's the truth: you can get the first two right, but you also lose the trade if you miss this final step. And this is the one most traders completely ignore: the entry signal. This tells you the institution have just stepped in right now. It's time to get in, because price can come right into your area of interest and just break right through. Now there are two types of entry signal. You will either have a chart pattern or a candlestick pattern. Whatever signal you use, it has to prove that the variant or sellers with the most amount of capital has just entered the market. You can also combine both or use them single-handedly, but I like to use both to increase the probability of my trade. The only reason you enter a trade and it goes into your direction is because an institution or hedge fund or someone with big capital has just stepped in and pushed the market right in that direction. What the strategy did was help discount when and where those institutions stepped in. Know the direction, the area of interest, and your entry signal. But here is the problem most traders face: they don't know when to start, or they forget what to check first. So I built something specifically to solve this. It's a trading journal I use every single morning before I even open my chart. It walks you through exactly what you should check as part of your pre-market routine, so you never miss a step and you stay consistent enough to actually become profitable. Link is in the description. Go get yours right now.